The stock market had another wild day on Friday, with markets across the world taking a beating, falling over 500 points on the Dow Jones alone. US stocks have erased the gains of 2018 as expected to those watching the central bank balance sheets. If the Federal Reserve doesn't reduce interest rates at this point, stocks will hit a ceiling and will only have one direction to go. If they can reduce interest rates to the floor and begin QE4, we can watch the FANG stocks bounce to new highs. It's up to them. You came here for the truth, so let me unveil that for you. Today we're looking at the stock market. I want to show you what has happened. We're going to look at the technicals. I want to show you all the information related to what's happening today. Let's begin by taking a look at this article out of CNBC. Dow tumbles more than 500 points, wipes out the gain for the year to cap a wild week on Wall Street. I believe the losses this week were 4% alone. Looking at this next article, the title, Panic-like selling takes hold in NASDAQ as stock market losses gather steam in the final hour on Friday. So there's more information there. They're talking about the breadth and so on. I think it's important to understand breadth, particularly at this time in 2018, where you can see many stocks are at their 52-week low, where you have a bunch of stocks that are basically carrying the weight of this market and keeping it alive. Rough week for stocks, and you're looking at the major US indexes, seeing that they have fallen, erasing their gains for 2018. The Dow Jones came down 559 points. It is quite significant of a drop. You're looking at the death cross that occurred right now, which is the 50-day crossing over the 200-day moving average. That has all been because of the stock market falling very quickly in such a short period of time. This comes after October's disaster, after November's disaster, and now in December we're encountering the same patterns today. Looking at all of the major US indexes, S&P 500 in the top right corner, you could see where it has fallen to, but also with the NASDAQ, the Russell, and the Dow Jones, all of them falling below their moving averages, including the 200-day moving average there, and that is a true sign of weakness. Looking at the FANG stocks, I believe at the time of this recording, they are down 24% from their peak. So this has been at the same time when we've been told that now is the best time to pick up deals in the FANG stocks. Still, they have been unable to keep up with their moving averages, falling down 24% as a whole. If you look at some of them obviously doing better than others, but even the biggest of the big, Apple, is not doing so well. And this happens to be Apple right here, 168 right now, and looking at this, completely erasing the gains for 2018 as well. This is a very big company, let's not deny that. We're looking at an $800 billion company, but it was a $1 trillion company and has fallen ever since. Now this is one company that will probably be around in 5 years from now, probably in 10 years from now, but is the current price justified? That's what a lot of people want to know. That's what's happening right now today. We're looking at a lot of the fundamentals underlying all of these stocks really starting to come up now, as people are saying, okay, so it wasn't as easy as it was throughout 2017. Which stocks should I get rid of? Which should I start to sell off a little bit of, take some profits on others, rebalance my portfolio, and start to prepare for worsening conditions? That's what the primary institutional investors are doing now throughout 2018. S&P financials have gone back to levels we haven't seen since September of 2017. This is just another case of an entire group of stocks coming down into very deep bear markets, and it's not the only one, of course. Looking at this, you can see that the European markets, Germany was down over 4%, Italy was down over 2%. Just looking around, they all tumbled down over the last few days. Looking at this from the 3rd up until the 7th, this week was not friendly to stocks no matter where you look. Now look at Deutsche Bank, falling below €8. I've been tracking this one particular stock. It continues to fall further and further and further. And there's so many news articles that are coming out right now saying this is a great time to buy into Deutsche Bank because they're a big company, they're going to get bailed out, they're going to get secure, and therefore the stock is going to rise. That's like the game of hot potato, and it's something I don't want to play, okay? They are trying to advise people people to get into stocks that have obviously come down significantly. This is one very good example. And surely it might be bailed out by Germany, it might be bailed out by the ECB, by the IMF, and any other number of institutions or methods that they could do so. But do you want to take that risk? That's up to you if you want to do so. The global systemically important banks, the too big to fail banks, the too big to bail banks, are so severely down. We're looking at the lowest they have been since what's probably November or so of 2016. This is literally a disaster waiting to happen. Look at where it was earlier this year, peaking over maybe 155 on this index, now sitting at 105. We are very shortly going to be down 50% on the too big to fail banks. That is going to end up in a very big issue for the entire global financial system. We are already down basically 50%, and how do you think that typically ends? Not very well, okay? That's just the way it goes. The financials tend to go first. You can see the weakness there, especially if we start getting defaults on credit cards, on mortgages, on auto loans, whether that's subprime or prime, it doesn't really matter. If we start to have the defaults, it's going to start to unravel all of the derivative products, and we could have potentially something that is much, much worse than the financial crisis of 2008. But I know a lot of people are shying away from this type of information because it's scary and we don't want to be scared. We just want to know which stocks to buy. And that's really not what this channel is all about, obviously. If you've been watching for any number of episodes here, you know that this is simply just the information, just the data. I want you to be able to get what you need. And this is all the data that I believe that we need. I try to bring it to you twice a day if I can, but if not, at least once a day, so that you're up to date. The information is coming so fast that we can't keep up with it. So I try to dissect all of the information that I gather on a daily basis, squeeze it down into a 10-minute video if I can, and then bring that to you. I do suggest and recommend that if you're watching this on any number of platforms, that you increase the speed if you want. You can do that through the settings, and it will allow you to actually increase the speed maybe by 1.25, 1.5. Even some people do want 2 times if they are so inclined to do that. It might be a little difficult sometimes to understand, but any way you can get in more information, then do so. I'm always listening to audiobooks and things just to get more and more data into my head. So that's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel. So I do appreciate that very much. Last but not least, if you found this video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can flip through these books at the link in the description below, so definitely check that out. And if you want the audiobook, that's at themoneygps.com. And also, the podcast of The Money GPS is available on iTunes Podcasts, so you can just go there, search The Money GPS, and all my episodes appear there automatically. That's all. Take care.